Good morning. You know, people always ask me, Warren, what should I buy? And I always smile because that's the wrong question. The right question, the one that has made me far more money over the years, is, Warren, what should I avoid? Rule number one, don't lose money. Rule number two, don't forget rule number one. That's not a joke. That's the whole game. Point one, avoid what you don't understand. The first thing I tell anyone, stay inside your circle of competence. I've watched brilliant people, doctors, lawyers, engineers, walk into investments they didn't understand and walk out with nothing. Why? Because they confused complexity with opportunity. I don't invest in things I can't explain to a 10-year-old. If I can't draw it on a napkin, I don't own it. When the dot-com boom happened in the late 90s, everyone thought I'd lost my touch. Warren doesn't get tech, they said. But I understood something they didn't. I didn't understand it, and that alone kept billions in my pocket. Point two, avoid following the crowd. The second mistake, doing what everyone else is doing. The stock market is the only store in the world where customers run out the door when things go on sale. When prices drop, people panic and sell. When prices soar, everyone rushes in. That's exactly backwards. Be fearful when others are greedy, and greedy when others are fearful. I've said it 1,000 times because it's been true 1,000 times. The best purchases of my life, American Express, Coca-Cola, Bank of America, I made them when the headlines were terrible and the mood was grim. The crowd is almost always wrong at the extremes. Point three, avoid market timing. Third, stop trying to time the market. I have never once, not once, made an investment decision based on what I thought the economy was going to do next year. Not the Federal Reserve, not interest rates, not elections, not recessions. You know why? Because nobody knows. And I mean nobody. The forecasters, the economists, the TV analysts, they have a remarkable track record of being wrong. If you wait for the perfect moment to invest, you'll be waiting your entire life. Timing the market beats timing the market. Always has, always will. Point four, avoid high fees and excessive trading. Fourth, beware of the financial industry itself. There are a lot of very smart, very well-dressed people on Wall Street whose job it is to keep you active. Because every trade you make, every fund you switch into, they get paid. Activity feels like progress. In investing, it usually isn't. I once bet $1 million that a simple S&P 500 index fund would outperform a collection of hand-picked hedge funds over 10 years. I won that bet comfortably. The hedge funds had brilliant managers, but they had enormous fees. Costs are the enemy of returns. Keep them low. Stay patient. Let compounding do its quiet, extraordinary work. Point five, avoid borrowing to invest. Fifth, never ever invest with borrowed money. Leverage is the great destroyer of otherwise sound strategies. You could be completely right about a company, its fundamentals, its future, its management, and still get wiped out simply because you borrowed to own it and the market moved against you at the wrong time. I've seen very smart people go broke because they were leveraged. You can't predict short-term prices. And when you're using margin, short-term is all that matters to your broker. A good investment idea ruined by debt is still ruined. Sleep well at night. Own what you can truly afford to own. So let me leave you with this. Investing isn't about being brilliant. Charlie Munger and I, we haven't succeeded because we're the smartest people in the room. We've succeeded because we've been consistent and because we've spent decades avoiding the mistakes that derail most investors. Don't invest in what you don't understand. Don't follow the herd. Don't try to outsmart the calendar. Don't let fees quietly drain your wealth. And don't gamble with borrowed money. If you just avoid those five simple things, you'll outperform the vast majority of investors in the world, not because you did something extraordinary, but because you had the discipline not to do something foolish. And in this business, that is extraordinary enough